Well, all right, you guys. Good to see everybody. Glad to have everybody here. I still see people joining us. Welcome, 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 everybody. I am Luther Ragsdale, broker, CEO of Platinum Real Estate. And we are here to talk about creative financing and the 203K loan. All of my information is right there on the screen. Luther at platinumrealestate.com is the best email. There's my personal cell phone number right on the screen, 404-513-5677, 404-513-5677. That is my personal cell phone number. And if you are on this webinar or watching this webinar right now, if you are not a member of Platinum Real Estate, we are looking for new agents. We do have career opportunities. You can join us. You can shoot us a phone number. You can call or text 404-994-4600. That's 404-994-4600. Or you can send us an email, careers@platinumrealestate.com. If you are not a real estate agent that's currently acting with Platinum Real Estate, we do have excellent career opportunities for you. Would love to have you as a part of our Platinum Real Estate family. And also, I want to mention that I have an excellent online real estate course. You can go to my website, lutherragsdale.com. That's lutherragsdale.com and learn more about my brand new online real estate course. Typically, that course is there's $3,400 worth of value for the online course. I have reduced it down to only $197. So you can go to my website, lutherragsdale.com, and learn more about that. Our speaker today, the person that's going to be helping me with the education today is Miss Tamara Birch. I want to say, I still see we have agents calling in. Welcome, welcome to all of the new agents calling in as well. I want to say a special thank you to all of you guys for calling in today. I know that we are in the midst of a coronavirus. On Tuesday, we had a corporate call just for my platinum agents. So we discussed the coronavirus and how we're going to get through this. You guys, here's the deal. As they say, this too shall pass. So I know everybody's kind of locked in. We're all shut in. And right now we can't kind of go out and do business as usual, but that does not mean we cannot do business. This too shall pass. And so in the near future, we're going to be back to business. And what you guys do not want to do as real estate agents is stop your pipeline. So continue to work your pipeline. Platinum Real Estate agents on Tuesday, we talked a lot of detail about the coronavirus and what we should do and how we should move forward. And as the leader, as the broker of the firm, I discussed that in our private meeting. We're not going to talk about the coronavirus at all today. And platinum agents, or if you are an agent and you would like to know from a from a real estate agent standpoint, Luther, what should I do today? How should I prepare my company? What should I expect and what should I do tomorrow? Feel free to give me a call. I would be more than happy to, give you the same information that I gave my real estate agents on Tuesday. So platinum agents, I know you guys are equipped. I know you guys are good to go. If you're not a platinum agent, I will help you as well. You can contact me and I will be more than happy to give you some strategies on how we can maneuver through this time and still grow our business, still run our business, and still be successful. I have another coaching session that I'm going to have this coming Tuesday, and I'm going to talk about that even more. It's going to be a kind of part 2 where I will talk about that in even more detail. So yes, we are in some unprecedented times, but that's good because that's going to allow us to take our our business to the next level. Okay. So with that being said, I thank everybody for calling in and joining us today. So enough about that. Let's jump into what we are going to be talking about today. Today, the goal is to talk about 203K loan, 203K financing, the 203K loan. What is it? And not only what is it, how can we move our business forward with it? How can we take our business to the next level using the 203K loan? So we have preferred vendors. Miss Tamara Birch is one of our preferred vendors, and she is a mortgage professional. And so I asked her to come in today and to talk about the 203K loan. So let me see if I can get her together. Miss Birch, you on the line today? Hello, Tamara Birch. Let me see here. Hello. Oh, I see her.
Can you hear me now?
There you go. Hey, how are you, Tamara?
I'm good, Luther. How are you?
Good, 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 good. First of all, thank you for taking the time to talk to us today and to give us some great information on the 203K loan. I know I'm excited about it, and I know everybody who have called in is very excited as well. So the 203K loan, let's jump right into this thing.
Yeah, let's get in. There's lots of information that we're going to talk about. And first of all, I appreciate everybody's time, and I hope everybody on the call and all your family are safe and sound. So thank you for taking the time to speak to me, to listen to me today. And let's hope we can get you some information, some little nuggets here so that when you're out speaking to your customers, you've got some knowledge there. But at the same time, you know that you're going to be able to reach out to me anytime and get more in-depth information as well. So today we're going to cover types, loan to values, and maximum allowables. We're going to cover occupancies under these two programs. We're going to cover improvements allowed. We'll cover the processes, and we're going to cover some contract questions. So please feel free to ask questions as we go through. We'll make sure I kept this one much lighter than the last one we were doing so that we would have the ability to answer some questions, and or Luther may have some stuff he wants to cover after the video. So I've shortened this one down a little bit versus the last one. So what we're going to start with is the next slide, which is 203K. So 203K is an FHA product for primary residences only. I get this call all the time. Can I use it for investment? Can I use it for second home? No, FHA 203K is only going to be for a primary. Now, the debt ratios with this are much more lenient. You know, if we get an approval, we're going to close this loan for you. So the debt ratios can go higher on this program, maybe 50, 55. I do like to see them lower. We do want to protect the customer and not put them in a situation where they have a loan that they can't afford. So we will keep that in mind and have that conversation with them about their debt ratios. So everybody knows that debt ratios are based on the property that you're buying, the house payment when we're finished, and all of the monthly obligations that I see on credit and or child support or alimony. That all has to go into the equation for the monthly income that the borrower is receiving that is verifiable. I'm going to repeat, verifiable. And this program, why so many people prefer this program is it has a very low down payment. The down payment on this is 96.5%. So they're still only putting down 3.5% in order to do this program. So they're able to roll, which we're going to talk about what we can roll in on a couple slides down here, not at this minute, but they're able to roll in these costs of fixing up the property and ultimately get the house to become their home. So we're out there, we're looking at properties, and I'm getting calls constantly. This one needs fixing, or that one needs fixing, or there's less inventory in certain places around Atlanta. And so this is a great opportunity as a realtor. When you walk into the property, you're able to go, well, we might be able to do a 203K and add a new kitchen or add a new bath or those types of things. And those customers really appreciate how you're showing the property to them in a different light. So that's a good thing. And when I do approve your customers, I go over that product as well. Should it be something that they're wanting to do if they're out there and they're not finding their dream home, but they found a house that could be their dream home. So low down payments, there are restrictions with this type of product. Restrictions are going to be mainly you're not going to be able to put pools in, things of that nature. We're not going to be able to add things that they consider fancy, over the top, tennis courts, pools, satellite dishes, things of that nature. We're not going to be able to do any of those things with this program. This program is really to help that borrower turn that house into a home that they will love with their family. That's what this is going to be for. So the benefit allows them to, in a tight market, or even not in a tight market, maybe it's in a subdivision they really want to be in, but the turnover is really low in that subdivision because people go in and they stay in there, but the houses haven't been updated for 10, 15, 20 years because they moved in and they never did anything because they've been living there for 30 years. This benefit allows them to go in without having to have all this cash on hand and say, you know what, this is exactly where I want to live, but I just want to redo everything inside. So the benefit lets them get into that subdivision they want, or that area they want, or that type house they want, and then really make that house the home that they're looking for. Okay. So with that said, we're going to talk about two types on the next screen that 203K offers. They're going to offer you a limited type and a standard type. Okay, so the limited type, if you kind of think of how it sounds, they're limiting you. So they're going to limit you to no more than $35,000 in improvements. Okay, no structural, no major improvements. That is for somebody who's looking for cosmetic. They're not trying to add bathrooms. They're not trying to add square footage. They walked in this home with you and you know this is where they want to be, and they're super excited. It's the ranch they've always been looking for. It's that type home in that area they wanted. You can't believe it came on the market, and they walk in and it's green, yellow, orange, pink, blue, and black walls. Okay, you know, we're looking at it and we're saying, hey, here's the room sizes we want, the location we want, the style we want. Let's come up with how much is it for a new kitchen, a new bathroom update, new carpet, new wood, new floors, those types of things. And then their mind starts to go and they're like, oh, you're right, this could be my home. So that's what this particular limited is for. It's going to be for minor repairs, not major repairs, meaning structural. This is going to be for minor and no more than $35,000. We're going to get capped here at the 35. Standard opens up everything else. Okay, there is no limit. I have somebody talking to me right now about adding $110,000 onto their loan for their adding extra square footage, an extra bedroom, and an extra bathroom. But it's in the area they want. They haven't been able to find anything in this area, and that's going to meet their needs. So the standard's going to open that up for major repairs, things that are majorly wrong. You're walking in and you're looking up and going, oh, wow, there's a roof up there and I can see it from the living room. So we're going to talk about major structural repairs here. It's going to permit you to do that under this particular program. And you're still doing that at 96.5%. So it's going to allow you to fix a foundation. It will allow you to add square footage, add a bathroom, fix a chimney. So when I'm talking about major types of repairs, those types of things are going to be permitted under standard, and we're not going to get limited on that $35,000. So that's kind of a big deal. And that's when we're looking at them, which one's going to be right for them. They're still the same thing, 203K. They're just two different types. They have the same loan to value and they have the same interest rates. It's just how we're going to process that, how we're going to pay out to the borrower during the repairs, and how much slower one will be to close than another. And I am going to talk about that on another screen. So I do want to pause here just for a minute and see if there's any questions so far about what I have in here before we move on to talking about contract questions, appraisals, concessions, things of that nature. I do want to stay here just for a minute and see if we've got some questions.
Okay, so let's do this first. Let's back up because I want to make sure everybody gets this, right? Okay. So let's back up, and the first question is, this is a 203K loan, but you said FHA 203K. So let's break this down for everybody on the line. You said FHA 203K. Explain how FHA and how 203K and how that's come together. I think we kind of understand the FHA loan, but I think give us a little bit of background on the FHA loan, down payment, credit score. Let's go there with the FHA. Then how does that and this 203K have a marriage and come together?
Excellent question. So FHA, we are permitted to go down to a 580 credit score with FHA. You get a better chance of approval with FHA if you're 600 or 640. That seems to be their main trigger, but you could do it with a 580. I have someone closing with a 580. And you only need 3.5% down. So somebody who could have owned a home still can have an FHA loan if they had one previously. If they don't own a home within 100 miles or have an FHA loan, they can have this loan. It's just allows them to get into the property with very little down, and they're not as stringent on the credit as you're going to find under a conventional situation. So FHA is going to be just a little bit more lenient. They're going to have a little bit better rates, although I'm not discussing rates because we got all those clauses in there. But they're going to offer a better program. So where the 203K comes in, it is a product that is offered by FHA. FHA allows you to buy a home under FHA guidelines, and it allows you to do that with adding improvements to the property into the loan. So you're going to be able to add these improvements into the loan. And so it kind of opens up and allows properties that maybe weren't quite taken care of as well, or updated as well, or they've aged out some. It allows those properties to come back into the community, have owner-occupied people in them, taking care of them, and maintaining the balance of the neighborhood with value. So that's kind of how 203K does that.
So agents, here's the deal. So I have a client, I'm marketing, I'm prospecting, I am advertising. Client comes in, client goes to Tamara. Tamara says, hey, now she have a lot of different products, but she says, hey, you know what? This person qualifies for FHA. So first of all, this is an FHA product. Now, I didn't go out and I show this property and I am showing different properties, and the client says, hey, listen, I like this particular property, but this particular property needs repairs. This is why this is valuable to you guys. So many times we may say, hey, you know what? This deal won't work because this property needs $5,000 worth of rehab, $2,000 worth of rehab, $50,000 worth of rehab. We think this deal will not work. What you're learning today is now we can say, all right, no. We have a 203K loan. If you're buying a residential home, you already qualify for FHA. Now we have 203 financing that can go directly into the loan, and now you're able to buy this home and you're able to rehab it with 203K financing. Okay? Now, a couple of things that we have to make sure, but that I want to make sure that you guys understand, agents, and I don't want to just blow over this because I want to make sure you guys get this. So we have an FHA loan. We have the 203K rehab loan. So now you found this house and the house needs some rehab. We go back to Tamara. Tamara says, yes, this deal qualifies for 203K. Cool. Now she's telling us we have limited and we have standard. Okay. So there is certain requirements for limited. There's certain requirements for standard. Now, let's make this very clear, Tamara. The question is, all right, so we get this 203K. There's two types. There's limited and there's standard. Make it very clear for us as real estate agents, what's the maximum and the guidelines for limited and what's the maximum and the guidelines for standard?
So the guidelines are going to be 35,000 max for limited, unlimited for standard. So what I do when I have but I have to have that conversation with you as the realtor and the customer on the phone, because I'm asking very pointed questions. For them, all they hear is 203K, but I am determining which one based on the questions I'm going to ask to get the answers I need. One, how much are we thinking it's going to cost to fix this? Number one. Number two, what is wrong with the property? What are you trying to accomplish? When I start to hear words like mold, adding square footage, structural damage, then I'm going to be seeking the standard. I hear, well, we really want to paint the kitchen and put in new cabinets, and we're thinking about new cabinets in the bathroom and maybe some new hardwood floors. I'm thinking limited because they're not doing that much to the property. Nothing major is going on. Now, when I set this up for you, you're really not seeing that. What I'm really trying to show you here is that FHA is able to offer different types of the loan program for you so that the customer needs are ultimately met. We want to make sure that we can meet those needs. And that's what we're doing with this program.
Perfect. And I think that's real important information. And those of you guys, my platinum agents who have been around for a long time, here's how we look at it. limited, cosmetic rehab, standard, major rehab. And now Tamara's going to get more detailed, but when you go $35,000 and less, that's cosmetic stuff, right? And what I teach is cosmetic stuff is stuff I could do, but I choose not to do. All right. Painting, cleaning, cosmetic stuff I could do, I choose not to do. Standard, major stuff. She's talking about mold, expanding square footage. Listen, I'm not going to touch that, right? So excellent, excellent, excellent. Now we have a couple of questions. One of the questions for you, Tamara, is this. Well, a few questions, huh? Question, Tamara, can I get this loan if I already have a current mortgage? Now, agents, I want you to think about this question, because it's primary residence only. So I think I know the answer. Many of you guys should know the answer too. So you are purchasing a home. We can't do this with investment property. We cannot do this with rental property. So if you already have a mortgage, that's cool. So let's think about this before we even ask Tamara the question. Can I get this loan if I already have a current mortgage? Tamara, the answer is?
Well, I'm going to answer this with two statements, and let's see if this answers the question. So I get realtors sometimes who call me and say, hey, I want to list this property, but I could get maybe $100 grand more for them, and they want to do improvements. Can you do a 203K on a property they live in? They fix it all up, and then I'm going to list it later. The answer to that is yes. Yes, they could do that under the 203K. If they have a house now and they're buying a new house within 100 miles of the current house, and you are not selling that house, then no, you cannot do it. But I have a product when we get to the bottom that you'll be excited about. So no, you could not do that under 203K. So let's hope that answered your question. Or if you have a family member and you're not selling the house. I know you're realtors and you're trying to sell houses, but you got a family member and they want to do something, or you yourself want to do something, but you don't want to move. Yes, if it's an owner-occupied property, you can do the 203K as a refinance, cash out, technically, sort of, where we're going to fix up the property and do a 203K on it. So that is an option as well. So I hope that answered all three in case you were asking it one way or another.
Wonderful, wonderful, wonderful. Now, next question. Do we have to complete the work before my client moves in?
No. They can do it as they're it depends. Some homes that I get, the call I got Friday, it was condemned. You can't move in till it's done. It's condemned. Do I get a lot of those calls? No, but there was $200,000 in damage to this property. So, you can live in the property while you're under construction, or choose not to live in it while you're under construction.
Good. Next question. Tamara, is there a build restriction for the loan, meaning built before or after a certain date?
I'm not sure I understand your question, because we're not building, we're repairing. I do have construction loans of VA, FHA, and conventional, where we do the full construction on those properties with the land, even VA at 100%. So I'm not sure I understand what you mean by build, unless you're talking about adding to a whole set of square footage, but they like to see it completed within 6 months, if that's what you're asking.
Let's do this. Why don't you shoot that question in more detail? Because I want to make sure that I get that one answered right. Mm-hmm. Why don't you send that question back to me through the chat in a little more detail? I think I know what you're talking about, but I don't want to guess. So shoot that question back to me with a little more detail. Now, next question is, does your credit score constitute the type of loan that we're getting? So if I go limited or if I do standard, is my credit score have anything to do with it? So if I'm a 580, can I do limited or standard? If I'm a 700, can I do limited or standard? I guess the question is, does my credit score have anything to do with this, or will that affect the type of 203K that I can qualify for?
That's a great question. Excellent question. We will move forward on a 203K with a 620 credit score or higher, irrelevant of limited or standard. As long as I get an approval in the system, I am going to move forward and close the loan.
Good, good, good. Wonderful, wonderful. All right. Let's move forward. Contract questions.
Okay, so this I want to stay on for just a minute because as realtors, this is so important to you. Yeah, you're looking at the property, you're coming up with ideas. Let's fix this, let's do this so we can make it look pretty. But you're the ones who sit down and you write the contract, and then I know I get the calls or the text messages. Tamara, I'm writing a 203K. What do I fill in? So the first thing I want to talk about, which is so important, and this is the one that's harder to grasp, especially if it is in a community where it is a seller's market really hard. Unfortunately, with the 203Ks, the time frame gets extended. We're closing loans right now 3 weeks, 4 weeks. So they're moving very, very, very quickly since we're so automated. But with the 203K, that's not possible. The time frame, depending upon the scope of the work, is going to depend on how long it's going to take you to close. So we're doing minor repairs, say 20, 30,000, and it's like updating a kitchen or something, depending upon how fast they have those bids, which we'll talk about, or the contractor bids, then we can move the time frame to maybe 40 days. But if you start talking about major construction like the one I had on Friday, $198,000, we might as well call that 200,000. You know, I'm telling them we're looking at 60 days. Because of the time frame, what comes into play is the appraisal. So on the next, you'll see there time frame appraisals, those go hand in hand. So you cannot order an appraisal or even really create the loan package correctly until all of the bids are in. So what I tell people is when you're putting that contract in, instead of 3, 7, 10 days for due diligence, you may need 10, 15, 20 days for due diligence, because that lets you get all your contractors in there, get all your bids together. And these have to be detailed bids. You can't come to me and say, Tamara, I'm going to put in kitchen, it's about, I don't know, 5,000. I'm going to do the bathroom, I'm thinking maybe 3,000. So I just want $8,000. No, these are formalized, written bids, detailed, every single thing they're going to do to that property, and that has to go to the appraiser before the appraisal can be done, because we're going to look at future value of the property. So you also cannot be, and I'm sure most of you've heard of it, the white elephant, okay? You can't buy a house in a $200,000 neighborhood that only sustains 200 and add 100,000 and think you can get a loan for 300 when no home is sold for over 200,000. You're not going to be able to do that. This is a property that has some distress, and if you bought it for 100, you're putting 50 in it, it's going to be worth 150, 200,000, then that's the type of property you're looking at. You're not going to be able to add more to the property than what the future value will be based on renovation completion. So this appraisal is based on if you did all of these things in your bid, this is what the value is going to be for your property, not what it is today. And that's how the appraisals are determined. So that slows down the process, because you might be writing a contract today, but it might take you, especially right now, right, especially getting somebody out right now, it might take you more days than you anticipated to get a roofer in there, to get a contractor in there. And so you want to protect your customer, because we can't even order an appraisal. So I recommend the appraisal time frame be at least 30 days, because you're going to have 10-15 days where you're trying to get together the information for the appraiser. And then once the appraiser goes out there, she may have questions. Did you mean this? Did you mean that? And they're going to want to make sure they're giving us the correct appraisal. So instead of them taking 3-4 days, they might take a week or so, because they have to find properties that are already completed to the specifications of what you're going to do with this property. So I recommend that you're looking at, 30 days on the appraisal, at least 20-21 days on due diligence, meaning getting my contractors in there, and then a 45-day close. Now, when I see it come across my desk and it's 198,000, I'm telling them 60 days. But I know that in advance, because I'm asking very specific questions when you're trying to write the contract. We're having those very specific questions up front, and having an in-depth conversation so that you feel comfortable, because this type of program, it adds a little stress to everyone, a little more than, say, my close in 3-week customer, because everybody's trying to put all the pieces together. Now, with this, the sellers can do a 6% concession. Okay, that's the maximum, cannot go above that. And there are no gifts and no down payment assistance for these programs. So anybody who's trying to do something with a gift or down payment, this is not for them, and you don't even want to bring it up when you're looking at those properties. We can have separate conversations with them talking about it only costs them $150 to paint the inside of their home themselves, and wow, wouldn't white paint look great in here? Those types of things, as they're going to make that happen. So I gave a tremendous amount of information here. So I do want to stay here and answer some questions, but there's one thing that's not listed here, and I get this call, and I do want to put it out there. I get non-arm's length transactions sometimes. So FHA will not permit that above 85%. That means that, hey, I'm going to list this house, but the person living in it wants to buy it, and they're related to the uncle who owns it. Okay, that person's putting down 15%. They're not putting down 3.5%. It's not an arm's length. And I know that's not listed, but I thought I'd say that because that actually came up this week. Okay, I just want to answer some questions here, and then we're going to get on to a really good program. We only have about 5 minutes, so I do want to touch base on the other program.
Okay, question here. The question here, and she sent the same question, just a little more detailed. It says here, I had a lender tell me, so the agent had some other lender say, for a FHA loan, the preference for a newer home, excuse me, that an FHA loan, that is the preference for a newer home. Homes that have less, that needs less repair. The question is, will a client qualify if they're looking for a house in the 1940s?
Absolutely. Absolutely. It's not that it's a newer home. FHA, I never want to contradict people, but I'm going to make a different statement. FHA is for a home, no matter how old it is. I just closed one that was 127 years old. No matter how old it is, but it's in good repair. That's what FHA. It's for customers who may have a little bit more credit challenges, may not have down payment. Maybe they want to get a gift for the down payment. They want to do some down payment assistance, but the home is in good repair, not perfect, good repair. So that's what FHA is for. And the 203K takes it a notch because this home's not in good repair, but we can make it in good repair by doing A, B, C, D to the property. I hope that answered that question.
Yes, 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 yes. Very good, very good. Next question that we have here is, can I use 203K if I purchase a duplex, live in one side, and rent out the other side?
Under the 203K, it is only, we were just changing our guidelines on that just recently for us. I'm going to have to come back to that for you. Hold on just a minute. I hate to say the wrong thing.
And while she looks that up, let me say this, and let me just kind of explain to everybody the question. If you've been to my wealth building workshop, if you follow Platinum Real Estate for any amount of time, you know my story. I started off in real estate as an investor, and then I transitioned into a real estate agent. And then from there, my vision expanded and I became a real estate broker. When I started off as an investor, I used a strategy called owner-occupied investment. So I lived in one side and I rented out the other side. So the first property that I ever purchased, rather than going out and buying a home, I purchased a duplex. Now, when I purchased that duplex, I purchased it as my primary home. So I was renting an apartment, okay? I was actually renting an apartment, and I was a property manager of the apartment complex. So I was working for an apartment complex, and I wanted to build wealth, generational wealth. I was straight out of college. Had nothing, right? I used a FHA loan. My father gave me down payment assistance for the down payment. I bought a duplex. I lived in one side. I rented out the other side. So the question here is, you know what? If I have a client that wants to use that strategy, or if I personally want to use that strategy, and buy a duplex, live in one side and rent out the other side, if that duplex has some cosmetic repair, and if it's under $35,000, can I do limited? Or if it's over the $35,000, can I do standard? So the question that's being brought up here is, hey, this is an FHA product. FHA qualifies for owner-occupied investment. Can I also do a 203K? Tamara, do you have a question? Do you have an answer for us on this one, or do we need to?
I just wanted to make sure we hadn't changed guidelines, and we have not. You can use it for a duplex, a triplex, or a quad. So at this time, we are still offering it on those as well.
Good, good. That's money. Look, you guys, that's money in the bank. Now, let me be very clear, and Tamara, you help me here. FHA allows FHA allows a gift. So when I purchased my first home 30 years ago, my father gave me a gift. I did not have the down payment. My father gave me the gift. So FHA said, hey, if you're buying this house and if you don't have the money, a parent can give you the down payment. So my father gave me a gift. I never had to ever pay that gift back. Tamara, correct me if I'm wrong, but I believe you said, I believe I heard you say that the 203K will not allow that gift to happen. Is that correct there?
On the 203K, there is not a gift available. Correct.
Okay.
You cannot do a gift.
Oh, so that 3.5% have to come from the borrower, no gift.
Correct. They have to have their own funds. They're looking for a borrower who is in good standing, a borrower who manages their money, because they're going to be managing, $30,000, $100,000 going out, working with contractors. So they're looking for someone who has been responsible with their funds as well, a saver.
Gotcha. So they basically want somebody who actually have the 3.5% saved up in a savings account or checking account or some type of liquid funds is somewhere where they can put down the money. Got it.
Right.
All right. Very
Right.
good. Very good. Very good. And I just wanted
Now,
to make that point because that's different than your normal FHA.
of course, that is a great question. Yes, FHA does allow the gift or down payment assistance where they could get in for practically almost no money at all. So unfortunately with this product, they're going to have to show they have those funds seasoned out.
Good. Question. Do we have any more questions here? Questions, anyone? And let's make some points here. Because I believe
what I'm going to talk about only for like 5 minutes here. We don't have time to cover the home style.
Here's what I would recommend. Rather than us doing home style quickly, we can do a whole nother session on home style by itself, because we have really less than 5 minutes overall.
Okay.
Let's do this. Couple of things. Okay, first, questions. If you have questions, shoot it through the chat, please. All questions, shoot it through the chat. Or you can unmute yourself. *6 will allow you to unmute yourself with questions. *6, unmute yourself with questions. Home style we're going to do next time. So listen, you guys, great program, wonderful program. We're going to hit that up at our next session. We can do a webinar strictly on that. Now,
and you definitely want to come back for that, because the main key difference, and we're not going to really go into it, is you can use that for second homes and investors. So it's not just primary. So you will want to come back and learn how investors are able to use that and still get a conventional loan. So we'll cover that on the next training.
And let me say this, agents, platinum real estate agents, you guys know how I train, and you know what I teach, which is simply this. Never, ever, ever become the mortgage professional. When you are out in the field, I do not want you to start talking to clients about 203K limited and standard and down payment and no down payment. That's not what we do. Here's the key for this webinar. Number one, Tamara is great. All right. Tamara is the go-to person. We have hundreds of agents out there. And there's the broker. When I receive a problem from a mortgage person, it's never Tamara. Matter of fact, let me go even a step further. I have actually had problems, and obviously I'm not a mortgage professional. I have sent the problem to Tamara, and she has literally straightened out problems from other companies. It's crazy. It just blows my mind how some of these other loan officers, some of these other banks, some of these other financial institutions don't know what they're doing. I will send it to Tamara, and Tamara will say, look, this is what they need to do. She's not even getting paid for it. She is just a part of our family. So she gives advice to me. I give it to the agent, or even better yet, she will call the agent directly and will give the agent the advice. The agent will literally then tell the other mortgage company and help the other mortgage company figure out the problem so that the client is happy, Platinum's happy, I'm happy. I appreciate that. What's my point? Everybody that's listening to me right now, the number one thing that I hope you have learned today is you have a partner in Tamara. So when you go out and Tamara say this person is pre-approved for the financing, when you go and you look at that house that have problems and issues, We're not the mortgage professionals. We're not going to start talking about limited and standard. We're just going to say, Tamara, I know there's a rehab loan out there. I might not even remember it's a 203K. I might not remember the numbers, but I know, Tamara, you have a rehab loan. Let me send this client to you and help them with that rehab loan. That's the first thing that you need to understand. And I think that is the most important thing, because if you understand that you have a partner in Tamara with a rehab program out there, just send them to Tamara and let Tamara do what they do. Okay. Because being in this business, partnership is literally everything, and that can make you and break you every single time. Okay. Next thing that I hope that you guys have learned: this rehab loan is a rehab loan that is a product under FHA. So we've been knowing FHA for a long time, and a lot of us have closed deals with FHA financing. Now we understand that we have 203K as well. Now we're going to get into home style later, but the other thing that I hope you take home from the webinar today is Tamara have financing for your residential home buyer. She also have rehab financing for investment property as well as second homes. So basically, if you have a deal that needs a little rehab, Tamara can help you with it. All right. Whether it's the 203K, whether it's home style, whether it's investment property, whether it's you're building a home, whether it's a rehab of a investment property, whether it's a rehab of a primary purchase, she have programs that can make it happen for you. All right. Now, with that being said, please, ma'am, please, sir, write down her information right now, 770-896-5001. Call her, text her. This is her cell phone number, 770-896-5001. Platinum Real Estate Agents, you know this is our vendor of choice. Non-platinum agents, this is the vendor to go to. All right, 770-896-5001. I will vouch for Tamara. She answers that phone. She returns calls, and she have the answers to your problems. Questions, anyone? I want to open up that chat one more time. Great. I am getting some great feedback as great webinar. Hope everybody have learned something. I hope you have learned something, because I know I did, and I've been doing this for 30 years. And I've learned something myself, so absolutely great. 770-896-5001. Miss Tamara Birch. All of her information is right there on the screen. You can write it down, as well as if you are listening via phone and you're not actually looking at the webinar live, please pull over. Write down this phone number right now, 770-896-5001. Tamara Birch. Platinum Agents, you guys know all of her information is in the agent portal. You can log into the agent portal. All of the information is there as well, okay, because she is our preferred mortgage vendor, okay? Yes, I am getting great comments. Everybody learned something. A great webinar. Now, if you are an agent, but you are not a member of Platinum Real Estate, we would love to talk to you about career opportunities with Platinum Real Estate. You can contact us at careers@platinumrealestate.com. That's careers@platinumrealestate.com. You can always contact me directly, 404-513-5677. And if you are on this webinar, and if you are saying, you know what, I learned something, this was valuable information, I would ask you to do one thing. It was free and you learned something. That means it was an added benefit to you and your business. If that's the case, please Google Platinum Real Estate. Right now, please Google Platinum Real Estate, and I would love to have a 5-star review. It definitely helps our business overall. So if you learned something, if you enjoyed this information today, please Google Platinum Real Estate and please give us a 5-star review. Do it right now. I truly appreciate it. All right. I have 1 minute left. Ms. Birch, thank you for your time as always. Great job.
Thank you so much, Luther, and I hope everybody stays safe and has a wonderful day.
Yes, indeed. So thank you very much. Any other questions? Let me check my questions because you know I am big on trying to answer every single question that's out there. And I don't think we have any more. Listen, you guys, we're going to have part 2. We're going to talk about Homestock. So I will be sending out emails. My staff will be sending out emails as well as text messages to talk about Homestyle. That's a big one because that gets into investment properties and things like that. Okay? All right, you guys, my time have expired. Thank you for everything. Thank you for your time. I look forward to talking to everybody at the webinar next week. And special thanks to you, Mr. Mayor Birch. Great job as always. All right, you guys, stay safe. Stay at home. I'm praying for everybody during these times, and I am looking for some great things in the future. Thank you very much, and may God bless you.